right? Everybody clap. You know what they do in the school? Clap twice until everybody stops. Yes, it works. This is, yeah, if you can hear me, clap, clap, and then everybody be quiet. Good evening, everyone. I'm Bonnie Mullenbrock, who's had one of those great vodka drinks with our organic presenter tomorrow, so thank you for that. So I hope I'm not slurring my speech. I need to get some food. Thank you for being here. Welcome to everybody who's just joined us, and thanks again to those who made today such a great day. We saw some great presenters. Thank you to all the investors for your engagement. And again, welcome to everybody who's just joining us. And so now we get to do some celebrating. Hopefully you're enjoying that. And celebrating some success stories in our space. They're starting to happen. If anyone who was questioning whether or not you really can do well by doing good, we're thrilled to be celebrating some of the folks who have demonstrated that in the next day, tonight and tomorrow. And in that spirit, I also want to call out someone who's here tonight. Jeff Steinbein, can you wave? There he is, of Social Imprints. And we're thrilled to have him here today. He presented just after the 2008 debacle at IC, and has created and gained support from Investor Circle, and has built a tremendous company with great social environmental impacts here in this area, employing at-risk adults with sustainable printing services, so environmental and tremendous social impact, a real success story from Investor Circle. So I really encourage everybody to say hello to Jeff and learn more about that, and we're thrilled to welcome him back. So congratulations, Jeff, and thanks for being here. And here to introduce our keynote tonight, who's Adam Lowry. To introduce him is Jonathan Storper of Hanson Bridget. And I need to give special thanks to Hanson Bridget. They're a really special partner of IC. They hosted our pre-conference events yesterday, provided a very valuable entrepreneur workshop today. Just imagine, could you help entrepreneurs understand the kind of whole Series A term sheet in 1 hour? You know, the quick and dirty on that. So Jonathan's quite a master at that. So thank you for that. And they're also our lead sponsor of our new San Francisco local network. So by all means, we so appreciate that, and reach out to Jill or Alex if you want to learn more about that opportunity. We're excited to get that going and have more frequent IC events here in San Francisco. So Jonathan, who's about to step up, is a partner at Hanson Bridget. He represents entities and their investors in connection with general corporate law, mergers and acquisitions, intellectual property, and technology-related matters. He also represents nonprofits, trade associations, and standard-setting organizations, and that includes a lot of great work that he has done with B Corp and an instrumental role in writing California's benefit corporation legislation. So a real friend not only to IC, but also to the whole impact enterprise and impact investing community. So welcome, Jonathan.
Thank you, everybody. It's really an honor to be here, and it's an honor for Hanson Bridget to be a longtime sponsor of Investor Circle. And since this is a celebration, let's first celebrate Bonnie and her staff for an incredible conference, right? Let's give them a hand. It's been a really, really good conference. Before I introduce our speaker, Adam Lowry, I do want to make a special pitch for the new Investor Circle, sort of local San Francisco Bay Area network. Please think about joining it if you're in the Bay Area and want to participate on ongoing deals. We think we're going to start gearing up in the summer. We're going to start holding these meetings at our law firm, Hanson Bridget, which is downtown, a convenient place for you to stop off from Uni or BART and continue to build community. So please do see Bonnie or Jill, Alexander, Nick, or their staff if you're interested. And now it's my pleasure to introduce Adam Lowry, who is our keynote speaker today. Adam is the co-founder and chief greenkeeper and head of international business for Method since 2001. And he and his friend Eric built this company really from the ground up, and it has really been an incredible success story. He has a wonderful background from Carnegie Institute for Science, developing software products for the study of global climate change. Adam is focused on building sustainable innovation into the Method business from the very beginning. He also directs sustainability aspects of product design, sourcing, and production for Method. I heard actually recently that you're being considered for Entrepreneur of the Year by Ernst & Young. Just heard this yesterday, so this is a big honor, Adam, regardless. So.
Yeah, we've lost it like 3 years in a row.
Well, this could be the year. So he's also a Cato Environmental Fellow at the Aspen Institute. He lives in San Francisco with his wife Mara and 2 daughters, Kenny and Ryan. Though an avid environmentalist, he's a big fan of muscle cars, I hear. And just take a moment for a personal moment. Adam and I sort of got connected in 2007 when we went up to Sacramento trying to get a predecessor bill for the benefit corporation legislation passed. That bill was a simpler bill, passed the legislature, got vetoed by Governor Schwarzenegger, but it led to us going back a second time and creating the benefit corporation, which is now the law in 13 states and has now been introduced in Delaware. And for those of you who know anything about corporate law, once Delaware goes, the rest of the country goes. So I just want to thank you, Adam, from our humble beginnings 5 years ago. The movement spread. So Adam Lowry, everybody.
Well, Jonathan is the guy that deserves all the credit on that benefit corporation legislation, and I'm looking forward to sharing in the very near future some great news as it relates to Method and now our much larger organization as it relates to that. But that's a different topic for a different day. Thanks everybody for having me here tonight. It really is an honor to be here in front of this group, and I thought what I would do, given the crowd that we've got here and where we are, is share just a little bit about the Method story and do so from my perspective as an entrepreneur, and also try to do so from the perspective of the investors that we've had along the way. Because I think that one of the really big reasons for the success that we've enjoyed at Method has been entrepreneurs who understand the investor perspective and investors who really understand what entrepreneurs are really all about at a pretty deep level over a relationship that has lasted more than 13 years now. So I'll tell a little bit about the Method story in that way, and in order to do that, I'm going to have to jump around on a few different topics because I've been given 15 minutes and I want to keep a lot of time for questions and dialogue. So I'll be jumping around between corporate finance, a little bit of Method history, founder motivations, and things like corporate culture. So here goes. I started Method in 2000 with a friend of mine, Eric Ryan. We were roommates in a bachelor pad on Pine Street with 5 other guys living in what can only be described as squalor. The way I describe this place it was exactly what you would expect a flat of 7 males in their mid-20s to look like. It's exactly what it looked like, a very ironic place for a cleaning products company to be born from. But nonetheless, we did. And the reason Eric and I started the company was, like a lot of companies, was born out of the frustrations of the two of us in our previous careers. So Eric was an ad guy. He was looking at brands and asking the questions, why are all the brands in the cleaning space really uninteresting, and why are they all the same? From my perspective, I had worked as a climate scientist. I had worked on the Kyoto Protocol as a part of the IPCC. I was passionate about the science, environmental science. I'm a scientist by education, but got enormously frustrated preaching to the converted, writing articles in scientific journals that didn't go anywhere, that were only read by scientists that were already concerned about the problem. And then secondly, as a consumer, trying to live a more sustainable lifestyle before that was sort of a buzzword. Every brand that I patronized asked me to make a sacrifice. So buy this ugly product that doesn't work, costs too much, smells bad, all of that, and you have to hide it under your sink because the earth is dying and you need to save it. And so we put our heads together and realized, there's an opportunity here to create something new. So we did that the only way we knew how, which was we started making products in our bathtub, in our flat, and delivering them store to store to grocery stores around the Bay Area. So the first sales calls at Method were me putting a tie on, going into Molly Stone's grocery store at 6 in the morning and cornering the store manager, and quickly thereafter getting kicked out of the store. So I've been kicked out of pretty much every grocery store in the Bay Area. But with a lot of perseverance, we were ultimately able to build a small business of maybe 20 stores, direct store delivery, and then skipping a lot of chapters in the Method story, we were able to build the business from there over the last 13 years to a very tiny local business, to a regional business, to a very significant national business, and now a global business. So what I have been asked to land on today is a few things that we've learned along the way, a few challenges that we've had, and a few bits of advice. I think I'll just plant a couple of seeds on those and let you guys ask the questions, and we'll get a conversation going about that. But I'll fill in a couple of insights and chapters in the story that I think are relevant to the things that we've learned in the challenges that we've had. So Method is, in the very early days, we started from very meager beginnings, and we built the business very, very quickly. So between 2001 and 2008, we had built the business to over $100 million in scale. And we had raised 4 rounds of financing. We had over $20 million that we had paid in to the business in various forms of angel and venture capital. And things were riding high. But in 2008, things got tough. And for us, they got even tougher, not just because of the economy and the fact that we're a premium brand, but because some of the mistakes that we had made, some of which are classic mistakes of overextending yourself, going too broad before you go deep, things like that we don't have time to go into. But what that really created was a gut check moment for our business, both for Eric and I as entrepreneurs and for our investor group. And fortunately, we navigated through that with a couple of principles that I'll describe to you. But what really enabled us to succeed through that period was what I would call is building the right positive tensions in a business between the board and the management team to be able to navigate through some very, very difficult decisions, like getting out of whole business units that were making us a lot of revenue, but maybe not as much profit as we wanted, making even harder business decisions like letting a quarter of our staff go at one point. But all of those decisions led to us retrenching the business and continuing it on a growth trajectory that ultimately led to, very recently, our business was actually acquired. So we were acquired by the parent company of the largest green cleaning company in Europe, which is called EcoVer. And we've now created, I say this with a chuckle, we've created the world's largest green cleaning company, which means we're still pretty much the smallest cleaning company in the world. But we are global now, and our business has been acquired. So we have, had an exit, if you will. But I'm still standing here, and I'm still standing here as the guy that's still helping to run Method. And so for me, not much has changed. And so a little bit about that story. When you build a business as rapidly as we've built it and had success the way that we have, we've certainly had a lot of people come knock on our door and say, hey, can we buy you? And there's always been 4 things that for me as an entrepreneur were critical and non-negotiable for me to say yes to partnering with another company or selling my baby. And they are first and foremost that whoever bought our business had to not only preserve but enhance our mission. And our mission is one to create positive social and environmental good through the business that we do. Secondly, they have to keep the current team that we have at Method in place. I believe very deeply that it is not what we do at Method, but how we do it that's the secret to our success. I wrote a book in 2011 called The Method Method, and this book, the core thesis of this book is that you can copy everything that we do. You can copy design, you can copy sustainability, you can copy our copy, but you can never copy our culture. And if we're the best at our own business culture, then we will always stay ahead, because instead of us trying to out Clorox or out P&G, we're going to turn the tables on those guys so that all of a sudden they're trying to out Method. And if we're the best Method that Method can be, then we're going to win. And so preserving that through an acquisition was something that was critically important to me. The third thing was that I wanted to have any partner would have to bring more resources to allow us to grow our business better, faster, and more profitably than we could do on our own. Pretty much all of you in the room know that venture-backed businesses are not known for their fat balance sheets, and they're very a scrutinizing eye on every investment decision, as there should be. But when you seek a partner and you want to go forward after the acquisition, for us it was really important that we had a partner that would allow us to make the investments to get to the type of scale that allows us to not only compete on the creativity and the culture that we have at Method, but actually compete on the scale as well. And then finally, and I list this one last because it is, in my mind, was the least important, is shareholder value. So what's the price? So we've had many opportunities through the years. Many people knock on our door in order to say, hey, you're doing well. We'd love to partner with you guys. We'd love to buy you, whatever. And it's never been quite right. And in fact, I've always believed that and I would say this is one of our learnings, is that never build a business to sell a business. You've got to just build a great business. And if you build a great business, you'll have great options. I've always just believed that on face value. And there have been many times in the boardroom, many times even with my co-founder, where I have vehemently disagreed with people about the next steps that we should take in our business in order to make it attractive to a certain M&A market or attractive to a public market or things like that. I really reject those notions. I think if you build a great business, good things will happen. And in fact, that's what happened with us. So we weren't looking to sell. Our business was, at the time, this is about a year ago, the fastest growing cleaning company in our industry in both Europe and North America. We still are. And this company, the parent company of the EcoVer brand in Europe, approached us and said, hey, we really like what you guys are doing. We like how you're bringing together a substance and style or design and deep sustainability and succeeding in the marketplace, beating the traditional competitors. We'd like to buy you guys. And, of course, our first answer, like always, was, nah, we don't really know who you guys are. And the EcoVer brand isn't it a little tired in the U.S.? It's kind of an old school kind of brand. I don't get it. But it was through the process of getting to know the ownership and, more importantly, the motivations of those potential owners that we realized that all four of those things that I mentioned, preserving and enhancing our mission, keeping the team in place, giving us more resources to grow, and then lastly, that the price, all of those things could come together in this one deal. And so unexpectedly, at the end of last year, we sold our business. And I can proudly say that each one of those four things that I mentioned, we attained. And probably the thing I'm most proud of is every single person at Method kept their job to this day. And we're now on a hiring tear because the balance sheet and the opportunity that comes with having a little bit more resources behind our business is giving us the opportunity to do some things that I, as an entrepreneur, never dreamed that I would have the ability to do, like potentially build our own manufacturing facilities and things like that. So I am actually have a bigger job than I had before. So I'm not the entrepreneur that got bought and then gets put out to pasture. I actually now am doing the same job I was doing for Method now for both brands. So is my co-founder. And so in a lot of ways, the deal, if you want to call it that, feels a lot more like a merger than it does an acquisition. But that's because of the hard work and the diligence that we did on vetting who it would be or who it could be that we ultimately partnered with. So I've jumped around a little bit. I think I've eaten up most of my 15 minutes. I'm going to lay out a couple of things just in those categories of learnings, challenges, and advice, and just turn it over to you guys. So things that I've learned. I mentioned the first one, which is build a great business. Don't build for exit. I just couldn't believe that more strongly. The second thing I would say is endurance in a business comes through culture. ultimately, any of the ideas that you entrepreneurs have or the expertise that you investors bring to the table, there's probably somebody else out there with similar ideas and similar expertise. But if you can collaborate with one another in a way that is more productive than normal, then that's, I think, the number one thing you can do to increase your chances of success. One of the other things I would say is bring up the uncomfortable conversation first. This is something I see time and time again in businesses that I've witnessed, that I've sat on boards of, that friends of mine have started, that people have a tendency to want to avoid that really hard conversation. We didn't. When things got rough for us as a business, we brought those things into the boardroom, and it was ugly and it was hard, and it made me older. But it was ultimately those conversations that allowed us to retrench our business and put it back on a path, to great success. That I'm happy to say, really, we've only closed the book on the first chapter. I would say choose your investors carefully, but that'd probably be cliche in this room. For us, we had investors in our business for more than 10 years. Venture investors in our business for more than 10 years, and that's pretty unusual in this day and age. That is remarkable, but I think one of the reasons that we were able to do that is another learning, which is to build the right type of healthy tension in the boardroom. And what I mean by that is there were a lot of struggles along the way where I, as an entrepreneur, thinking about competing against the likes of Procter & Gamble, the world's largest advertiser and the largest consumer products company in the world, and even Clorox across the bay, who's a great company at a $5 billion scale, right? How do we compete with these guys? As an entrepreneur, always thought, well, we got to build. I wasn't particularly concerned with maximizing profitability in our business. I wanted to show that we could be profitable, but I wanted to reinvest everything we could in growing as fast as we could. There were people in the boardroom with a more financial mind that said, hold on a minute. Let's make sure that we're building profitable growth as we go. And that was a tension, believe me, and was not always an easy tension to manage, but it's the right type of tension. I think it's an example of healthy tension that I think you have to build in the boardroom in order to have the right type of skill set to help we entrepreneurs succeed with the management teams we put in place. Surround yourself with people that are better than you are. That's another cliche, but it's true. The first person we hired, Eric and I, was the CEO of our business. We were 26 years old when we started the business. We did not know hardly anything about business. So we hired a CEO as our very first employee. And then lastly, I would say the last thing I would say is invest in culture as your number one competitive advantage. It's an easy conversation to kind of sweep under the rug, especially early in the days of a company when it's just a few people around the table working night and day to get things done. But really early on, Eric and I realized that we really needed to codify the values and the ways that we actually not only treated one another, but we competed in the marketplace. And even today at Method, every single employee worldwide walks around with these cards, which are our values cards. And they have things on them that wouldn't surprise you, things that talk about collaboration and innovation. There's a few things that are uniquely Method. One of our values is what would MacGyver do? And another one is keep Method weird. But each one of them has on the back of it, so for example, here's MacGyver. And if you go down to our offices, just right down here on Commercial Street, you'll see little pictures of MacGyver all over the place. But more importantly, what MacGyver's about is resourcefulness, right? Something every entrepreneurial business needs. But then on the back, what we do is we codify what are the behaviors that we want each person to exhibit in order to be able to produce resourcefulness within a business. And then we hold each other accountable for that, all the way down to the way that we review our people. So invest in culture as your number one competitive advantage. All right. Challenges. there are so many of these, I don't think I can even name them all. But I think probably the one that I would that I would talk to the most is this idea of building scale versus building optics. I still think that's probably the hardest challenge that from an investor and an entrepreneur interface standpoint was one of the things that we spent the most time working on. I'm not sure that we always got it right, but we've landed the business with a great exit for the investors and a fantastic outcome for me as an entrepreneur continuing to run a challenger brand. So we can talk more about challenges when you guys ask me the tough questions. From an advice standpoint, I think one of the things that's really important is, I mentioned for me, the reason I started Method is I wanted to use business as a way to create positive social and environmental change in the world. And so in many ways, the fact that we make cleaning products for a living is sort of a circumstance. It's a circumstance of the fact that that was the category where my co-founder and I were most well qualified to be disruptive. You could do that thing that I want to do in any industry. But what was key to doing that right and being able to manage this tension between driving what the investor interests are versus your passions as an entrepreneur was making sure that from the very beginning you design the business itself, the business model, so that the economic interest of the business is aligned with the social and environmental outcome that you hope to achieve. It's a very easy thing to say, and it's an extremely difficult thing to do. With that, I'm going to just stop and open it up to you guys for some questions. So hopefully I haven't taken too much time.
We're just testing this mic for the first time real quick. Test, test. Thank you so much. Amazing. Thank you so much. And we're going to open up for questions now. If you could just raise your hand, I'll bring the mic right over to you.
You spoke a lot about company values, and I agree. I'm a CEO of a startup, and we're trying to focus on that. How did you go about developing your company values, and how inclusive were you versus how much did you kind of try to express your personal vision of what the values should be in the company?
Uber inclusive. In fact, the way we did it is we did it very much from within, and I don't think there's any other way you can do it. This is not a plug for my book, but we describe it in gory detail in this book, how we went about that process, because the way that values fail is by having the founders, even if the founders are like the living, breathing embodiment of the brand or the business, right? If it's top down, it is doomed to fail. It has got to be authored by the people within the business so that they own it. Because that's the only way they can own it, is if they author it. And so we actually went through a process. I'll describe a couple of the highlights. It started with the leadership team of the business. It depends on how big your organization is, but at the time we had 4 or 5 people in the leadership team, and said, okay, we need to start codifying some of these behaviors. So let's start with stating what we'd like it to feel like and be like when we get our culture right, and just lay that out as almost like the brief for what we want it to be like. And then we created a thing called our values pod. Pod is a word for like a group of people within Method. And these were people that we hand selected that we felt embodied the intrinsic values that we wanted to come forth the best. And then we kind of briefed them and said, okay guys, how do we create a process where we solicit the feedback, get the debate going, and kind of author this from within? I will tell you, it took a year. Took a year of like lots of debates and like spending time in town hall style meetings. We have a Monday morning huddle every Monday morning at 9 o'clock where the entire company comes together in the lobby, and it's totally free form. We spent so much time doing that stuff that, frankly, if an investor were present, they would be like, what the hell are you doing? Like, get back to your desks and like work, right? But ultimately, for me, I believe that investment in time was probably the best investment in time that I, as an entrepreneur and my co-founder, could have made. So.
Can you mention the last thing you said about aligning the financial performance with environmental and social value on premium pricing versus discount and shelving and product packaging and ingredient? I mean, what were the decision points you guys made to kind of line that up, to true that up?
Yeah, well, to be honest, I will. This is funny. Tomorrow, I'm on a panel with former Nobel Prize winner, guy named Chris Field, who's lead author of the IPCC. I'll get to this point in a second. Jane Lubchenco, who ran NOAA for a while, and Ira Flato, who's does Science Friday for NPR. And the subject of that is, how do we restore the sort of statecraft kind of science dialogue? And so part of my, I believe very strongly that you've got to ground yourself in the science of sustainability. And so for me, environmental sustainability and also the elements of social sustainability, those are things that, I've studied and I have background in. And I think in order to design a business where you align those interests, you've really got to understand at a scientific level where your business, like if your business is a product business, where your stuff comes from, where it goes after you're done, but at a very finite level. And you also have to understand that same flow from an economic standpoint, and you have to understand that same flow from a social standpoint. And you have to map all of those things out and then start asking yourself questions about your channel strategy, your pricing strategy, your brand strategy, so that when you put those strategies in place, all of those arrows are pointing in the same direction, as opposed to things sort of contradicting each other. So I think in a small amount of time, that's probably more of an abstract answer than you want to hear, but that is the way I would approach it, because you've kind of got to deconstruct all of those elements so that you can build the business model in a way where you do align those interests, in my opinion.
Thanks, Adam, for all your comments. I think what's going on here is so unique in the space of so many acquirees that are misaligned with values, meaning, and mission with their acquirers, but in this case it's so aligned, it's almost like maybe you can tell some of the stories or experiences that you're having with the values, or what's trickling up, what's trickling down, how things are shifting, and where you guys are going with that, since you're already so much on the same page, but there's different cultures. I'd love to hear how you guys are blending.
I can share a little bit. It's so, in the process of getting to know the folks at Ecover, we really understood that where they were coming from exactly what I was just talking about, aligning the business to create, designing the business to actually create social and environmental good while you create good business, was something that was absolutely core to them. And in fact, Ecover was the very first green cleaning brand, founded in 1979. Right, I was 5 years old when that brand was founded. So they had authenticity to the core. They had the motivation and the passions to the core. They used very, very different language. And it's a very different culture. It's a Belgian company, and the corporate culture is very different. So for us, the yes moment on let's bring these brands together was really realizing that at the core there was the alignment that you spoke about. Since then, what we've been doing is actually an exercise about, method's going to stay method. The Ecover brand is going to stay the Ecover brand. They appeal to slightly different markets. There's a little bit of overlap, but there's a lot of strategic value in having a two-brand strategy that you guys can probably imagine, and that's going to create an advantage for us going forward. So it's not like we're mashing these two businesses together into one. But there's culturally, given how important culture is to us, we do need to create sort of a collective identity that gives room also for the individual identities of the two brands and the two locations. I mean, San Francisco and Mala, Belgium are very different places, I can tell you that. So what we've done actually is we've used our values and their values, and we went through exactly the same exercise that I described earlier to redo it. And we've come up with a new set of values that, through a ton of debate, and some of which was about, like, what were some of the humorous examples? Well, we have one behavior, which is infect others with your passion. Infect does not translate well. It really doesn't translate well. And there were a couple others like that. But literally getting down to that type of thing so that you get that collective ownership. And then we've also had to create, kind of little almost subcultures that allow people to still kind of celebrate the fact that, hey, I'm from San Francisco and I came from the method side. We are renaming the corporate entity. I can't announce what that is yet, but it'll be one parent company. It won't be a brand, but a parent company that will kind of be exemplary of that new shared identity. But the process is very much the same that we're going through in order to create, a cohesive culture that's now global with, some subcultures underneath it. Yeah, right here.
Quick question. So prior to the Ecovera sale, what kept you up at night, and what keeps you up at night now, if anything, or has it changed?
Yeah, it's the same things. Nothing's really changed in terms of what keeps me up at night. I mean, to be honest, it's one thing. It's us. It's what are we doing that could keep us from being the best method that we can be, and now best method and Ecovera that we can be. So I honestly believe that I wouldn't have written this book about it if I didn't believe that the way we work is the secret to our success. And so as we scale the business, how do we make sure that the bigger we get, the smaller we act? And that's what I've been worried about for the last 6-7 years, and that's what I still worry about.
I was going to ask. It's pretty astounding. A lot of entrepreneurship does kind of boil down to also having good luck, and statistically, it's amazing that you guys are still around despite all of your talent. And so I'm wondering, what are some of the ways that you've dealt with risk as an entrepreneur that have helped you get into such a great position?
I think we've taken a lot more risk than most people like to take. And I don't know what the relationship between luck and risk. If I did, I'd probably have a very successful consulting business. I do believe in luck. I think there's been a ton of luck in the method story, but I also believe very much in failing and how you learn from failures. So. I think one of the things that we have done, though, is I'll give you a couple quick examples. Is there have been times where we've taken 20-30% of our business and thrown it out the window and started over with a product just because we thought it was a better consumer experience that was more sustainable. And I mean, that is if you think about it, if you're a big public company, this is actually one of the ways that we compete against them. If you're a big public company, you cannot throw away 20% of your business for something that's greener and far less certain. Like, you'll get sued by your shareholders to do that. And so in that way, by taking risks like that, we can hold the legacy assets of our big competitors against them. And that's what allows us to do really innovative stuff and kind of push products really forward, ultra concentrated laundry detergent, stuff that we do. And so I think we take a lot more risk, and we build that in by, I think culture's a big part of it. And I think another part of it is just like the passion of the entrepreneur, just knowing that if we do things the way other people do them, we're going to get run over, at least in our industry.
I'm afraid we need to.
One quick.
Okay, one more.
You occupy the cleaning space. Can you talk about the role of women in your business?
Yeah. So our business is about 60% women by employees. We're well populated at leadership levels by women. Two of the three major business units in our business are run by women. All of the people immediately under them are women. And most importantly, 70% of our consumers are women. So,
Board of directors?
On our board of directors, now we have 2 women.
Oh, excellent.
So, but for us, I mean, women is who buys our women buy our products predominantly. It's about 70%, and so it's very important for us, in a consumer research standpoint, to be able to understand the motivations of women in purchasing products and things like that. And then, I mean, for me, it's just a question I've never really thought about because, it's just the way we run our business.
Thank you very much, Adam.
Yeah.